Hey everybody, this is Bob with Trade Genius. My good friend Phil will be back with us on Monday. So something wicked is coming our way. And I'm going to show you a series of slides and articles from just the last 2 weeks that if it doesn't send shivers down your spine, I don't know what will. Stay tuned.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Okay, Bob, now you got everybody's attention, or you're dismissed as a tinfoil hat, perma bear, end of the world guy. But I'm none of those guys, actually. If you ever knew me, I'm very optimistic, fully invested, love the opportunities for the future. But this got me thinking, and then it got me worried, and I thought I'd share it with you guys. So the first one that came up was, for you crypto nuts out here, is what is this all about? Okay, the FBI, of all places, is now warning people about using unregistered money exchanges. Okay, and to me, this is the first shot across the bow about we need to know who owns crypto in the United States, and we're not going to let you receive it or let you send it without knowing that it's happening. Now, a lot of people say, well, you know, my private keys, this and that and the other thing, but I'm telling you guys, they can track you down, okay, over time. They have very, very, very effective algorithms. You're not anonymous in Bitcoin land, you're pseudonymous, and they can figure you out, and they can put a penalty of severe sanctions on you if they figured out that you're moving these coins without their approval of or how it needs to be done. Now, I'm just saying this is the first shot here, but this is worrisome, you know, because I think what's happening here is that we have an environment where it seems like they're hell-bent on causing some sort of fiat chaos out there, and there's only a few places to hide in the chaos land, and one of them is Bitcoin, and I think they want to know who owns it, and maybe if they're going to try to stop people from owning it, but just pay attention to this. It's very interesting. Now, I don't think it's happening today or tomorrow, but FBI is the first place that this comes out. It doesn't come from anywhere else. You know, you don't see anything for legislation. So they're going to try to backdoor this thing and try to work through the courts. Remember, this administration is all about lawfare, and you might be a test case for them. So just keep that in mind, because that'll send a chill through the Bitcoin community, I would think. The second one's related, but it's also a little bit different, is that there was another thing here where you got basically depository institutions can't use cryptocurrency as an asset as part of their collateral. Okay, now Phil tells me that this is not a big deal in and of itself, but it's just the fact that they're not letting crypto be part of that is, again, okay, what do they have planned here? Okay, you know, this is reset kind of conversations, but the one below it is even more troublesome, where you can't use anything but grade A bonds on your portfolio of assets as collateral. So that means they're absolutely worried about most bonds going belly up or having severe stress into them. And, you know, when you get to AAA rated or A-rated bonds, I mean, you're talking the best corporations and treasuries. So again, this is, I think, a part of the shuffle to get everybody into the treasury markets, okay? And they're chasing people out of anywhere else it can be, okay? You sell your corporate bonds, Mr. Bank or Mr. Shadow Bank, and you're going to buy our treasuries because I have a lot to sell you, and I need you to be able to onboard these things. So that means all these B-rated or lower bonds are going to get crushed in the future. So if you own those, I would sell those before you take even a bigger haircut on them. It's going to be a big problem. And I think we're going to see yields go up even more, and I'm going to get to that in a second, which will make all bond prices suffer here as yields rise, because the government is going to become the shiny nickel, okay, out there on the street, and everything else is going to be left for dead. The next one here, this is one that got me thinking about doing this for the show today. Derivatives clearinghouse failures could bring down the international financial system. As you guys know, Phil and I have been railing on this 0DTE the leverage in the system, the amount of options being traded as opposed to underlying. And we're at a point now where, we're starting to talk about counterparty risks again. And the way governments operate, they never scream. They just start pushing out this information willy-nilly here and there through their proxies and through their NGOs to get it circulating out there. But this is a big problem. This is what brought down the House in 2007 and 2008, and it deserves being paid attention to. And this is coming from the Bank of England. Remember, the City of London does a lot of transactions, and we're not immune to it. We don't have a moat around our financial system. We're all interconnected here. So they have to be absolutely worried about some sort of torch blowing this thing up. And it's kind of scary from my standpoint, because when this happens, this kind of contagion can start a wildfire within weeks. And here's one of the sparks right here. I don't know what Janet Yellen's thinking. She's like our Secretary of State. She said it's important to unlock the value of nearly $300 billion in frozen Russian assets. I mean, this is tantamount of a declaration of war against Russia. If Russia took $300 billion of our money or our assets, we'd be screaming bloody murder, right? To go to war to get this thing back or whatever. But we're going to do it to them, okay? And she and this ilk are hell-bent on destroying Russia. Look, I'm not a big Russia fan. I think Putin is evil, okay? But we're not clean hands in this either, okay? So all I'm really worried about is what's the impact it's going to have on our system going forward. We're unassailable. The dollar's unassailable. We're a reserve currency, but she is trying to force other countries off of this system. And it's not just Russia. She's going to do the same thing to sanction Chinese banks. So she's trying to force these guys together. Now, could we ultimately beat both of them? Yeah, probably. But you don't know the downstream effects of all this stuff. You don't know the collateral damage that's going to come from this. And I'm really worried now because we're not exactly in the strongest positions right now. And I think this is what's going to cause a lot of volatility in the currency markets and it's going to cause a lot of volatility in trades. And speaking of volatility in the currency markets, have you guys seen the yen? Okay, this is what every currency in the world against the dollar is going to look like in the very near future. They've lost it. And I think the Bank of Japan's not defending it at the moment. They're letting their currency absolutely collapse. And that's going to affect exports. But for Japan, everything they import is going up as well. It's going to cause a lot of stress in the system for the Japanese people. But at the same time, it's going to roil the international trade flows. And remember, the Asian contagion, I think it was in 1998, caused a lot of grief around the world. And I think it's going to continue. And here's part of the reason why the Japanese yen is struggling so much and why everybody else is going to suffer too, is the 10-year is creeping back up again, okay? And if you notice here, our worm turned up, okay, after a brief consolidation, and we're heading up probably up to that double top. And typically when these situations happen is that, there's a chance for a peekaboo move or an extension of a fib on that. And that could push, the 10-year into 5.5% range. Remember, Jam Croissant called 5.5%. I think he's on to something here, and that would absolutely obliterate the stock market if it gets up to that high level. And it's going to be a tremendous opportunity for us, because then that's when you can really start loading into the longer term bond funds, because we'll definitely be in a recession, and you're definitely going to get some good principal play when that happens. And it's ironic here too, because on Tuesday, I'm not sure. I'll have to ask Phil. Maybe we'll do a thing on this on Monday when Phil's back. Is the QRA is on the 30th. And that's where Janet Yellen's going to announce how much funding they need, number one. And number two, they're going to announce the mix between Treasury bonds and Treasury bills. Remember, the more Treasury bills that she's going to put on offer is going to ramp liquidity higher than it normally is on a normal kind of QRA. And that will probably light the stock market up. And that's going to be that May-June liftoff that we've been expecting. And it also is going to continue to cause stress in the markets, and it's probably going to create the bear steepener that we've been talking about, where the 10-year and the 20-year and the 30-year are going to continue to rise in yield and lower in price. At the same time, she's trying to feed everything into these short-term funding mechanisms to keep the ball rolling to get through the election. And I think there's a correlation there between these T-bills and the 10-year. And at the same time, she's going to unleash potentially what we said yesterday, $1 trillion of liquidity. Now, remember, this liquidity is, if we said, is not going to be for the middle class or the lower classes, because what they do is it basically provides that into the banking system's reserves for them to then lend out. Well, other than probably the upper middle class to the upper class, there's no need. There's no ability to borrow anymore, okay? Rates are too high. People don't qualify. People are tapped out, or people are broke. And then the rich really don't need the money, because right now they're shoving all their excess cash into short-term treasury bills, getting 5% on their money, and they're sitting fat, dumb, and happy. So we can end up with a push on the string kind of environment where the only place the money can go is it's going to get levered up 8x. It's going to go right back to Janet Yellen and the federal government for their spending needs. And we just basically accelerated our deficit, which eventually is going to probably cause some great pressure on the dollar on the downstream side, and things are just going to be a holy mess. And I think that's the last slide I had. Oh yeah, I forgot to show this one. This is the share of the T-bills. Yeah. So the T-bills here is, she's already at 22%, and I think she's going to goose it higher. Look how high they got with COVID. Remember COVID, they shoved all that money in the system. We created all these distortions, right? And I think that's what they're trying to do again. They're going to try to create but the difference between the COVID and now is that there was legislation to directly feed cash into people. I just highly doubt that they're going to be able to do legislation that's going to get money into the system fast enough to, as direct infusion of money to people. So this is more going to be, if they did that, it's not really going to be effective to 2025 anyway. So not really sure what her plan is on this. It's just providing funding to the banks so they can turn around and fund the government. I think this is the play, but there's no soup for you. So all these things together have me very, very worried that something's coming down the line. Our Treasury Department has been very activist, okay? They're showing disdain for anything but the fiat. And, with interest rates high and with the games they're playing with Russia and China, and you start blowing up trade and you start defaulting on debt, that's all dollar positive. And it's the economies of the world, around the world, are going to start defaulting against the dollar. Their currencies are going to implode, and it's going to cause a great international crisis here down the line. So maybe that's the swan we're looking for, and just keep that in mind when you keep out and look at the news from a day-to-day basis. But that's kind of where we are. That's why we're not happy about the end of the year. I think these next 2 to 3 months is, you better make your money the best you can. If you're in debt, you probably want to pare down the debt. Don't go crazy on anything, and make sure you have enough of a reserve to hunker down for about 15 months, because I think it's going to be a really rocky road. And I think we're going to be surprised somewhere. I think they're going to do something that most people that believe like I do about how the economy should run, I think we're going to be shocked and dismayed. And I think they're going to unleash something on us between now and the election. So with that, thank you for listening to my ramble. There was no ticky-tacky with Phil and I, but we'll be back on Monday. And I hope you guys enjoy the rest of your weekend. Hit like, subscribe, check out our service. We've been en fuego on trades here. We love this volatility, and we can teach you how to trade in it. Thanks for listening. Have a good one.
Trade Genius.